advanced lectures for July. In this video, I want to talk about entry techniques and how they work on the higher time frame as well as the lower time frame, and how you can use that for bias. So if we think about the most well-known entry technique, let's say this is the M1 time frame. I want that low to be a little bit lower so it looks a bit nicer. We get turtle soup, and we then get a CSD. Okay, it's not really needed, but well, it is needed, but it's because I'm thinking too long term. So let's say we get turtle soup, we get a CSD. This is the classic 2022 model. What would we then expect price to do? Okay, now obviously this is our draw on liquidity, this level here. What would we then expect price to do? We would expect a gap, and then we could get our entry within this gap, and then we can see something like this, right? Now, this is the easiest SMR pattern there is, and the most well known, and the most reliable. Now, when we're here, okay, when we're here, and we close above this high, out of this higher time frame PDRA, when we're here, we expect price to come down into this gap to fill us, right? And we can put our stop at the low, and we can TP at the high, right? That's exactly how you enter. You close above, we have a gap below that we want to enter off, and then we want to buy back up to our target. Now, let's use this logic, okay, and we'll put this as 9:30 open. Now, if we then put this, okay, yeah, we'll keep it there. Now, completely let me just talk. So let's say this is 9:30 open and we're at this high, and we've got a gap below, okay? We don't have any of this. Let's now say that this is the H1 time frame. This is the hourly. Coming to a PDA rate. We've total soup, close above, and this is now 9:30. Same logic would apply, right? We would wait for price to come into here before seeing longs. Now the problem with having this fixed mindset of, okay, great, once we get down here we'll long, is the time it takes for us to come into this. Now if this was the M1 time frame, each candle would be a minute. So it's a minute, minute. We could get a market structure shift pattern within 3 to 4 minutes. So you form this low, 1, 2, 3, 4, and we've confirmed it. So on the 5th minute, we could drop in and then buy up for the 6th, 7th, 8th to distribute higher. Now, if this was on the hourly time frame now, same logic would apply, right? It would take an hourly for each candle to print, meaning 1 hour, 2 hour, 3 hour, 4 hour, and on the 5th hour, we're going to get the move lower. So using this logic, going into 9:30, yes, higher time frame, we are longs. But in order for us to come to here and back to here, we have to retrace back into here. And what if we start moving slowly down? And what if we start having things like this? You would have wasted a trading session. However, if you'd have just got the right bias, if you could understand the higher time frame with a proper understanding, you would then know, okay, that the bias for 9:30, this is on a small time frame, so I'll get rid of it. The bias for 9:30 is obviously longs, but are we in a position to long? No. For price to long this higher time frame buy model, price needs to come into this gap. So the bias going into 9:30 would be shorts into the gap, ERL to IRL. But on a high time frame, this is IRL to ERL. But because we understand that the higher time frame holds higher power and that this move out will be higher probable, however, this move has to happen regardless of if we're going to continue this bias. This move short to then go long has to happen. Let's say that's another hour and then that's the second. This is 10:30, that's 11:30. Cool. Okay, let's now take it. 9:30 opens, and at 10:30 we close below, and then come up into here. And this wasn't an SMR. The common denominator between both outcomes is that this move lower has to happen. So yes, we're bullish on the higher time frame, and you definitely can wait for us to come into here. However, what is likely to happen is more of a PM session then sweeps this to then go higher, because we have to understand time and open high, low, close. So if the 9:30 target is that we come into this gap, we would then expect to see something like this: open, high, low in the target, and then close. And that is why you get chopped out of longs if you fully wait for this to play, because the target for this hourly candle has already been met. So if you took a trade at 10:15, okay, long with your stop there, let's now say this is 10:30 here. What is price likely to do? It's a new hourly candle. It's likely to soup, goes above, and then long. Okay. So you've got to understand where are we going, but where are we in price? Where we going higher time frame is bullish. Where are we in price? Very overextended, if you want to say that, or taking out ERL. So for price to move to this high and back to this high at 9:30 open, price has to seek IRL that links to this high. Now, as we move down, price would have to move away from this high to then return to it. And as we get closer and closer, you'll see more speed. But even this logic here, for price to return back to this high, we have to seek support from IRL to bond that relationship between IRL and ERL. So if we put in a high that we want to be taken at a higher time frame, it has to seek IRL below for us to then be able to sponsor a move back up to this high. But fractalizing it, that the 930 bias is different to the daily bias. The 930 bias is where do we need to go in order to continue the daily bias. So in this example, in order to continue the daily bias, 930 bias would have to come into here. And then higher time frame will continue up if we are bullish. So I don't want to yap too much, but I just want you to really take in what I've said, and take away two things. One, where is the daily bias going? Slash higher time frame. Priority daily bias. Where is the daily bias going? Two, what does 930 need to do to continue daily bias? Now, if we opened here at 930, okay? If this was 930's open, where is the daily bias going? Bullish. What does 930 need to do to continue to the daily bias? Now, in this example, with 930 opening here, for 930 to continue the daily bias, it needs to short into this IRL. However, if we open here at 930, for 930 to continue the daily bias, where does it need to go to? Take out this ERL. Because then we would be moving from IRL to ERL. And then the same applies. So you need to know where the daily bias is going and what does 930 need to do to continue the bias. These two are not the same thing. Yes, we're bullish. That does not mean at 930 you take any long setup after 930 or in the macro. That means you understand where the bigger picture is going, but you use 930's open volatility to sponsor the daily bias. So hopefully this opened your eyes. Obviously, if it doesn't, then please watch it again. I'm going to put two questions because I'm going to put this in my Discord. Two questions you have to ask yourself. And then we'll put text, note, if 930 opens here, in order to continue daily higher time frame bias, it must short into the IRL. And then the same for if we open up here, if 930 opens here, in order to continue the daily higher time frame bias, it must long into the ERL. So It is simple if you let it be. So I will end it there. I don't know how long I've been recording for, but I have got more videos to create. But hopefully this video opened your eyes if you watched it. And yeah.